Hi, Karen Deis here, coming from Mortgage Currency Studios, where a bunch of us anal types just love to read the mortgage rules and compliance changes so you don't have to. Well, you know what? Somebody has to do it, right? Well, let's get started with what's happened over the last 30-day time period. First of all, in this issue, you'll find 3 mortgage talking points, flyers, and 4 charts and checklists. But the very best that's on there is the Facebook post. There are 6 of them this month, and simply you just push a button and it's automatically posted to your profile, or you can cut and paste, add your own words to it, and add it to your profile or your fan page. Oh, and don't forget the help desk that answers your mortgage questions about underwriting and loan scenarios. So let's start with a couple of updates that affect you personally. Now, who would have thought that there were fake NMLS schools and trainers out there? Duh. Well, NMLS is trying to put a kibosh to that by coming up with a specific logo that has to be used by all approved NMLS schools and instructors. And the logo itself will then also have a section on the bottom where it's listed the course number that they're going to be teaching for that particular course. Now, the old logo, the old MLS logo, nobody can use it anymore. That's the only approved logo, and it's posted on the website so you can check it out. Now, the reason for that is be sure to check it out, because you don't want to be paying for a course and spending the time for something that's not approved. In addition, HUD has come up with the final rule, which is the same as the old rule, that in regards to the SAFE Act testing. It's pretty much 3 times you're out. After you've taken it 3 times, you have to wait 180 days to start all over again. And by that time, you're effectively out of business. So, hey, if you're on taking the course the second time, I recommend that you take a study course beforehand so you're not out of the business for the next 6-month time period. Now, we're going to be talking about the Uniform Appraisal Data Codes. We got our decoder ring and found a 6-page chart for you to use with your clients and your loan and your real estate agents. So here's the important part. Hey, if you can't read the codes, how are you going to explain them to everybody? One thing to remember is that if you see code C6 or Q6, it's a bad thing. That appraisal is not going to make it through underwriting and the property will be rejected. So now Fannie and Freddie have required the codes as of September 1st. FHA is requiring them as of January 1st, but so far no word from VA as to whether they're going to require them or not. So bottom line, send the chart along with the appraisal report to your borrowers. Use the chart for a sales meeting with real estate agents. This month, there's nothing worth talking about in regards to Fannie Mae, but there's a couple of updates at Freddie that I want to share with you. Now, borrowers who may have been coming to you to do a DU refi or a relief refi, you may have gotten an ineligible code when you ran it through DU. Well, Freddie has relaxed some of their requirements, especially if they were in certain pools. And I recommend that you go back on some of these loans and rerun them because they may be eligible again. Freddie has changed that rule a little bit to make it easier for them to qualify. Now, we're still talking about Freddie here in this next issue in regards to self-employed borrowers who want to use cash from their business towards their down payment and closing costs. It used to be that you just had to get a letter from a CPA that says that by taking out this cash, it's not going to affect the viability of the business. It's all changed for Freddie, not Fannie yet, but Freddie. It's you as the lender who has to make that certification. So brush off those cash flow analysis sheets. Be sure that's in the file for the underwriter to take a look at. Now let's talk about FHA and VA loan limits for a while. Mortgagee letter 2011-29 talks about the loan limits and is an attempt by FHA to cover what's going to happen if Congress does not extend the old loan limits. So it covers the dates between October 1st and December 31st. But here's the kicker. If Congress doesn't extend the old loan limits, the new loan limits are not tied to the case number. They're tied to the approval date. Now, what FHA defined is, what is the credit approval date? It has 10 requirements, and there has to be 4 documents in the file in order for them to qualify for the higher loan amount. Now, VA's never had a loan limit other than some lenders require the 25% guarantee amount. By the way, if Congress extends this loan limit from the 2010, forget about what I just told you, okay? Now, if you're in an area that qualifies for USDA loans, and you do USDA loans, there's a couple of biggies this month for you. First of all, USDA has finally issued the definition of what it means by conventional credit. Why is it such a big deal? Because USDA has a rule that says that if a borrower qualifies for conventional credit, they cannot get a USDA loan. So there have been borrowers that have been turned down by underwriters and even field offices because nobody knew what that meant. Well, finally, there are 11 specific things that have to be met if a borrower qualifies for a conventional credit loan, and also what defines liquid assets, because that is all part of that whole conventional credit process. And by the way, there's a Mortgage Talking Points flyer for you on that as well. And one final reminder, October 1st. All hell is going to break loose within the next few weeks because the upfront fee and the monthly fees go into effect. The kicker here is that those loans have to be obligated by October 1st. It doesn't have anything to do with the application date, doesn't have anything to do with the submission date. It has to do with USDA already seeing that loan and obligating the funds for that particular loan. So believe me when I say loan officers are going to be scrambling within the next week or two to get those loans obligated through USDA. If you have any loans in process, pre-approved loans out there, and you missed that October 1st date, be sure to go back and redisclose those numbers to the borrowers. Now, in this video, we only covered a couple of the updates. So there were 14 articles in this September issue. The best way to figure out if they really apply to you or not is read the short teaser paragraphs. They give you a pretty much idea of what's going to be covered in the article. So remember, if you know the rules, you'll rule the market. This is Karen Deis interpreting the mortgage rules and reading the fine print so you don't have to.